Okay, welcome to the Stanford FinTech Meetup, and thank you for joining us. Today's meetup is focused on how market participants are monetizing data to make more money, to improve customer experience, and to reduce the costs, as well as a whole host of other benefits. I'm George Ravitch, president of Ravco Marketing, a strategic marketing consultancy focused on FinTech, and I'm one of the leaders of the Stanford FinTech Meetup group that's been around since 2017 and has over 600 members. Today, we're going to hear from three FinTech leaders who are using data in a variety of ways to improve business outcomes. They'll be explaining what they are doing today and how the future will unfold. Let me introduce them now. Mark Harrison is an innovation and strategy leader with more than 20 years experience in the financial services and technology industries. Mark joined Infosys Consulting in 2019 and previously held senior consulting roles at Novantas and Greenwich Associates. He helps design and build digital capabilities and leads engagements on a range of topics in retail and wholesale banking, including data and analytics, omni-channel customer experience, product management, and FinTech strategy. Andy Schmidt is a former banker and industry analyst who currently helps drive CGI's strategy across the financial services vertical. He has more than 25 years of financial services experience as a banker at Bank of America, a consultant at Ernst & Young, and an analyst at Gartner. Andy's primary expertise spans current and emerging payment types, anti-money laundering, know your customer technologies, and he is an expert at translating complex technologies into straightforward business opportunities. And Bruce Hrovat is a seasoned banking professional with over 20 years of experience in retail, commercial, and wholesale banking, and was the COO of a top 20 regional bank. As the CEO of Intraday, the provider of the world's premier real-time treasury software, Bruce helps financial institutions free up tens of millions of dollars of lazy cash each day by using data and analytics. So welcome to our three panelists. To set the stage, I just want to show you one chart. Here's a graphic that depicts the vast increase in the amount of data being produced every year. That's the blue line going almost straight up, and the cost of storing that data, which is the orange line going almost straight down. The point being that data is so abundant and so cheap to store that today's issue is becoming how to make sense of it all and how to make money from it all, which is all about monetizing the data. And that leads me to introduce our first speaker, Mark Harrison from Infosys. Mark?
Oh, hi, George. Thank you. I'm just going to take control of the screen here. Welcome, everybody. Thanks for joining. Part of the work that we do at Infosys Consulting, which is the consulting arm of Infosys, is really helping our clients understand what the opportunity is around data management, around data strategy, and yes, that includes monetizing those assets. And so what I have on the screen here is, by way of introduction, is kind of a spectrum of data strategy. And you'll see on the either axis, you've got defense and offense. And I took this, by the way, from a very good article in Harvard Business Review from 2017, written by the chief data officer of AIG. So the article talks about different industries and their response to data, whether they're very defensive, and I'll explain what I mean by that, around their data, or whether they're taking data on the offense. And there's some good examples here on the right of exactly what we mean by, these are some of the use cases for some of the data. And towards the bottom of it, you start seeing leveraging new sources of data, monetizing the value of the data you have. Those are very clearly going to be over to the right on the offense kind of spectrum. And heavily regulated, we work with banks at Infosys, and my entire consulting career has been working with banks. And it's a heavily regulated activity. So the data, many of the data assets that the bank has to collect needs to be delivered to regulators. And it has to be accurate. It has to come from a single source of truth. Those kinds of things that really help validate that the information is correct. So with that as kind of a background, I'm going to talk a little bit more about how banks think about their data. First, I'm going to take a step back and talk about some of the core activities of banks. And this is going to be a refresher for many of you, but for many of you who are not very familiar with commercial banking, they move money back and forth. And you can think of this as accounts payable, accounts receivable. In a commercial context, they keep information secure, which is the middle one. And they also provide financing, obviously lending. So those three kind of activities, these are kind of the historical roles of banks. And what's happening is that there have been incursions from fintechs in all three of these areas. And banks, as George talked about before, they start collecting more and more information, and they're starting to think about how do we take this kind of offensive, these defensive mode. How do I go backwards? Thanks. How do I go backwards, George?
Sorry about that. I think I did that.
Oh, there we go. Thank you. How do we turn some of one of our defensive kind of modes around onto offense? And so part of what we do in my work as well at Infosys Consulting is talk about these three pillars around providing advice. So how do you get your bankers to be able to help your customers improve their cash flow? And how do they improve cash operations? And providing benchmarks is a key way to do that. And that's where the role of data really becomes critical. So the first one around providing advice, that's kind of a practitioner's view. It's still very much of a relationship business, commercial banking is. But improving cash operations, and especially the one on the right here, acting as a connector, this requires a lot of data. And what we've been doing in a lot of cases is starting to, and I'm going to highlight one in just a minute, a real world example, using the data within a commercial bank in entirely new ways. Thinking about what can we learn from the payments data that we have? How can we take a page from the network economy theme, think about LinkedIn, for example, or any of the social networks. How can we learn more about our customers through who they pay and who they receive money from? And that's kind of the key theme of what I'd like to show you next, which is the real world example. And this was working with one of our commercial banking customers. And the question that they had, the objective really, that they had, the problem statement, how do we identify the most profitable buyer-supplier networks using existing data that we already have? And when I say buyer-supplier network, I'm talking about companies that are paying the bank client. Those are buyers buying something from the company, and then companies that company pays. These are the suppliers. And the questions then become more about, are there large buyers? These are customers of the bank's customer that represent a large market opportunity. And the same thing on the payables view. Which large suppliers that our customer currently works with do not currently bank with us? And so what that became was a prototype. In many cases at Infosys Consulting, we will take an idea, a thought, and rather than doing a traditional kind of consulting engagement that involves, a 200-page deck in PowerPoint, what we end up delivering is a piece of technology, a clickable prototype that goes in and talks about, okay, so we're going to explore these customer networks. We're going to uncover new growth potential within a particular customer's network. And you can see, it might be a little bit hard to read, but those little graphics there, the yellow and blue dots, those large yellow dots, those are large opportunities, either from an accounts payable perspective or from an accounts receivable perspective for new growth, right? And this is what we're talking about, monetizing data. So, taking that payments information and, using it in an entirely new way. I know we wanted to keep these intros kind of brief. So George, do you have any questions for me at this stage?
Yeah. How widespread is this practice of monetizing transaction data? You hear a lot about that. How widespread is it?
It's increasing in popularity, let's put it this way. It requires some data management capabilities that not all the banks have today. They have silos of information. So for instance, they may have information, wires information, ACH information, the new real-time payments information, all stored in different parts of the bank. It's not all kind of aggregated. So that's kind of a big challenge. But as those kinds of challenges are solved, we're seeing more and more of this kind of activity.
Okay. Anybody else have a question of our panelist for Mark, or want to comment? Okay. So let's move on. Thank you very much, Mark. I appreciate your perspective on that. Andy, would you like to give us your overview and your point of view?
Thanks, George. Appreciate it. For some reason, I know you've passed control over, but it won't let me advance. So if you wouldn't mind going to the next slide for me, that would be appreciated. So my name's Andy Schmidt. I'm the industry lead for banking at CGI. And the slide that you see in front of you is the way that I used to receive information when I was a banker. You would get fantastic paper reports that would be generated on a periodic basis, and made it a real challenge to not only understand where your portfolio was going, but also how best to help your customers. That static data, that dated data, for lack of a better term, was helpful, but not sufficient in terms of helping your client base understand what the opportunities were before them and how they could possibly benefit from them. Next slide, if you don't mind. And so one of the things that we do at CGI, in addition to our consulting capabilities and projects, but also our managed services and a number of our IP products, is that we conduct something called the Voice of the Client. And this is an annual survey of over 1,500 senior executives around the world in a variety of business and IT roles. And the purpose of this survey is to get a better sense of what's happening in the world. We use that to calibrate some of our offerings, some of our other approaches, look for markets to move into, and so on. And one of the things that we look at year over year is what are the shifts in interest, what are the shifts in focus areas. And you'll see that the top three things that we see on this slide are things that are pretty consistent across financial services overall. Looking to optimize operations to reduce costs, that is absolutely top of mind, but also to innovate and adjust to client expectations and regulatory changes. And along with that, driving to a client-centered operating model. But part and parcel with all that, and really integral to all that, is that middle piece there, the harnessing data insights to protect the bank and drive internal growth, because data really is at the core of all these arguments. You need the information to understand what your costs are, for example, in order to optimize and reduce them. You need to understand what your customers are looking for in terms of new opportunities, and you need to understand what channels are most often used by them and for what reasons. So harnessing data, being able to turn that data to your advantage is really becoming not only a key focus, but we expect it's going to be actually the number 3 area of investment for financial services over the next few years. Next slide, if you don't mind. So diving a little deeper into that information, into those projects, one of the things that we looked at were what were the digital leaders doing? And for us, the digital leader is someone who was driving results from their digital transformation efforts, from their modernization efforts, at a rate that was higher than the norm. And what's interesting, on the left-hand side, only 21% of banks overall were getting results from their digital strategies. And what was interesting along with that is 21% seems low. That's actually one of the higher percentages, the highest percentage actually across the data set that we're looking at. So why is that important, and what are some of the key hallmarks there? Now, as Mark was talking about on the payment side, 90% of the firms that we talked to were invested in payments and making payments more seamless. But just as importantly for that, 2 other key factors were in play. 90% of the respondents could actually find their data. and being able to actually find the data is one of the key challenges that we're seeing in financial services and in terms of data overall. The other part of it was that the 73% actually using cloud for data to give them faster, more flexible analytical capabilities in order to, again, analyze and derive value from that information. So how do you actually apply all this stuff? If you wouldn't mind going to the next slide. So the way that the data can improve outcomes can be pretty straightforward, especially in the corporate world. If you look at the image in front of you and you see that that little the heartbeat in the magnifying glass, that's really one of the more basic needs that a corporate treasurer has right now. Where is my money? How much do I have? Where is it? Once you have an understanding of where that is, you can go on to the next icon and figure out, where do I want to go? What do I need to do with it? Do I want to go to the handshake at the top, and do I need to, for example, borrow against my line of credit because my outgoings are going to be slightly higher than my incomings? Or is it the other way around? The clock with the dollar sign. Can I actually invest some of those funds in an overnight sweep or something that gets me a little better rate of return while that money is idle? Or or as to Bruce's fantastic intro comment, lazy money that's not doing anything for you. Or if I am a complex multinational firm, can I actually lend that internally? Can I support one of my business partners, the two people with the dollar between them, and improve my own liquidity within the organization at rates that are advantageous to me? So these are some of the opportunities, some of the questions that we're getting from the corporate world specifically. And really, the banks that are able to deliver these capabilities have the opportunity to get not only outsized returns in terms of revenue, but also outsized returns in terms of loyalty. Corporates, CFOs are more than willing to pay for these types of services. It makes their life easier and helps them manage funds more effectively. The issue is really, how do I collect all this information and use it in a timely fashion? Over to you.
Okay, thank you. So, Andy, those very interesting insights. There's a lot of similarities, or at least connections, between what you were talking about and also what Mark was talking about. Mark, I think from your presentation, one of the things you said, in addition to finding and managing the data, is also creating these ecosystems. So, Andy, I mean, do you see that in the research? Do you see that in what you're doing, where it's not just enough to look internally, but it's also looking outside to the ecosystem?
It absolutely is, and the use of outside data has increased dramatically over the last few years as banks are looking to understand what other markets are doing, but also what their customers are doing. And so whether it's a ratings agency or a data aggregator, the shift from internal to external information has absolutely moved in the direction of external data. You want to have access to bigger data sets, and you want to be able to use that to enhance and enrich the data that you already have in-house.
I think, Mark, you would argue that it's not only sort of syndicated data, but your trading partners' data as well, right?
Yeah, exactly. I mean, and that's a great point. The larger banks have the opportunity to be able to bank both sides of a transaction. So if they know that a manufacturing company is paying one of the purveyors of a widget that the manufacturing company needs to make bigger widgets or whatever it is they produced, that bank has tremendous amount of information about the supply chain of their client or clients, as the case may be. And that's kind of the whole point of the visualization I was trying to show. Is it's difficult to, I try to really, get through it pretty quick, but the idea is, the more data you have in terms of who your customer's customer is and what their supply chain looks like, then you can start making a determination to say, hey, we can help you get paid faster, which your customer's going to love, right? And not only that, but we can also go to the market with an offer to say, all of the suppliers of my client now can benefit from this supply chain kind of program. which could extend further downstream as well. That's a big bank example. You know, regional banks could be likely the mid-sized kind of company bank, and they could be offering something that would normally only be offered by a really big bank to these kind of middle market companies using those same techniques. They would just need to get more of the wherewithal, you know, from a data management perspective, or basically get a chief data officer or a CIO who can see around corners and say, all right, this is something we need to invest in because it's going to be the way that we need to win business, you know, soon.
So I think if I understand you correctly, what you're saying is for large banks in this case, the more participants in the supply chain that are banking with that bank, the more data they have on the ins and outs of who's paying who, and that they can provide really value-added insights to each one of them about the other.
Absolutely right. I mean, and it was on one of the pages I did show, there was the idea of a benchmark. So the bank would be able to go to its customer and say, does it interest you to know that you pay your suppliers on average 10 days faster than the average in your industry, or you're getting paid 5 days slower than other companies of a similar size or something like that? Those are the kind of insights. That's kind of a benchmark opportunity. But then you go deeper into those data points, you can be able to say, okay, so here's what this ecosystem sort of looks like. You can start sizing, and that's what that visualization was a market sizing of understanding how much of the ecosystem do you currently bank today, and how much of it is available to you because maybe they're only one or two clicks away from your largest client.
Interesting. Very interesting. Andy, back to you for just a second. Where are we in the evolution of this whole thing of monetizing data? Are we in the first inning or further along?
Yeah, I think we're probably in the first couple of innings. The key challenges that we keep running into are, where is the data? And again, the good news, 90% of the digital leaders actually do know where the data is. But the next piece of it is how good is the data? Do I trust it? And so, more than a third of executives don't trust the data that they have available to them. So it makes it challenging to make data-driven decisions if you don't trust the underlying information. The third piece of it is always governance as well. Do I have access to the data? Am I allowed to use the data in that way? Are there certain regulatory challenges that I need to run into, or that I need to address rather, in order to move that forward? And a number of the workshops that I've been in, it's concern over that last piece of it that can cause some of these projects to grind to a halt. What you need to do really is, look, let's put the ideas together, and let's understand that the idea may be imperfect, but it's a good idea, and it's an idea that benefits everyone. So let's work with our compliance teams, work with our regulators if necessary, figure out how to share this data if that's what needs to be done in a way that keeps everyone happy and safe, so that we can unlock some of these opportunities and move forward. And we are seeing some somewhat blunt force aspects of this in terms of integrated payables, integrated receivables. The idea being that you have much more insight into what your funds flow both in and out is going to be, and also reduces the amount of time you need to spend interacting with those types of transactions. The idea being that my ERP system can originate a payment, send it through the various payment networks, and it can hit your ERP and update automatically. Also be able to recognize, for example, to Mark's point about 10 days, if I'm paying within the first 10 days, or if I'm paying within the first 30, depending on the invoice, is that 10% that I've reduced the payment by, does that fully satisfy the debt or not? And so again, that level of insight, that level of automation exists, but the level of active query, of being able to create new opportunities, still early days yet.
Okay, interesting. And do you see anything out there that's accelerating the trend to using data in a way that's either enhancing a current relationship or a way to create entirely new products?
The short answer is yes. The long answer is there's a lag. And what I mean by the short answer being yes is that the push to real-time payments certainly is driving an interest in real-time information and better intelligence in terms of what your funds flow is going to be and who your trading partners are and what they're doing. Now it's incumbent upon the corporates to request, to demand of their banks these types of services, this type of intelligence, to help them see around the corners that Mark mentioned. But it takes time to develop these types of capabilities. So I think sustained pressure from the market, even sustained pressure from the fintechs that are able to handle these things, perhaps not at the scale that's needed, but certainly at the level of specificity. Will help advance the agenda much more quickly than just a standard market cycle might.
Okay. Well, thank you very much, Andy.
My pleasure.
I can't think of a better setup for you, Bruce. So all the things that have been said so far seem to just play right into what you want to talk about. So go ahead.
Yes, thank you. And thanks, Andy, because again, what I'm going to talk about is really the heartbeat, as you coined it, which is cash, of whether it's a bank or a corporation. And that was just a perfect setup. And even though Mark and Andy have talked about just the tremendous volume of data, we work with really a sliver of data, and we focus on one thing and one thing only, and we focus on cash. So the objective here is that what we're trying to understand is, even though everyone in the world today, let's say 50,000 publicly traded companies and then all the private companies, they all operate on an end-of-day mindset. The banks provide the corporates, kind of an end-of-day position. Some of the larger banks, for the larger customers, might provide a few positions intraday. The banks, on their hand, what they do is they maintain significant buffers. The top eight banks, the systemic banks in the United States, they're not quite $1 trillion in buffers for excessive long or short positions, just because they don't know what they don't know. And they're not only responsible for their large headquarters, but they're also responsible for all their legal entities. And then the banks, they offer a PDF file, let's say at the end of the day, or they might even provide a workstation to their larger customers. So the banks have very limited information about what happens until the end of the day or the next day. And because of what, this problem, the symptoms are, is that, in the world, there are trillions of dollars of out of balance cash flows and liquidity. And even most small to medium-sized corporations that might be $3, $4, $5 billion in annual revenues will be sitting on $150 million a day of money that's basically lazy cash somewhere in their system. And all of that has a cost of funds associated with it. And however you calculate that, if you calculate it at 0% interest rate and the money's free, or if you calculate it based on your cost of capital and it's 6% or 7%, all of this has a cost to it. And with the pandemic, people more than ever want to know where their cash is and how to keep it moving, because if they wind up with in a long position, for example, there's nowhere really to put it where you're going to get any return. There's no, the interest rates are just so small, or in Europe, they're negative. So essentially all we're doing is we're assembling the data intraday, and we're taking a very small sliver. We're taking it essentially from the core banking system. It's basically 10 or 12 data fields. All we do is we, visually show the treasurer, where they're long and short, and then we recommend, the remediation. And the result obviously is, all kinds of things, but generally in this case of COVID, essentially most everyone wants more certainty. And the more certainty you can give them with their cash positions, the more awareness they have, the more information that they can start to make, better business decisions. So let me just go here if I can. So I'm just going to show two pictures here, but this goes to the point, George, that you and Mark and Andy are trying to make about how you monetize data. And, essentially we have just one screen that is the core screen. And the objective is much like you would if you're, Amazon, or if you're some kind of physical supply chain, you want to know where your package is. And all we're trying to do is we're trying to show the treasurer where they are in real time during the day, and where they're long or short. We do a forecast, and what we do with the forecast is we try to make sure that we also change the mix. We're not just looking at history and trying to take that history and project it forward. And then we're providing them, information about, much like you would in a car. You're just trying to say, okay, what's my funding cost today? Do I have, nettable flows that I'm missing today? What kind of concentration risk do I have? And then, again, much like you would see in Netflix, who are my customers, suppliers, and customers, who am I paying, who am I receiving? And then the math, the AI piece is very simple, because now all I'm doing is I'm taking those relationships and saying, who can pay, who would benefit from that? Much like what Mark was saying, earlier, what if you can get somebody, 10 days ahead? Or what if somebody knows that that's earmarked and that's going forward? So, and generally, if I just touch briefly on the kind of the left side here, when we talk about monetizing data, what Netflix and Amazon do is they don't just forecast what's happened in the past and then take a linear projection in the future. What they do is they take the mathematics, the deep learning, the artificial intelligence, whether it's, or some machine learning. And what they do is they try to make sure that they form relationships. So what Mark was saying, for example, trying to form relationships between, let's say, just one bank and their corporate customers. Now you start to have more information about not only the bank itself and how it can manage its own liquidity and keep the line flat here instead of being up and down, but they can now offer that to their customers. So netting is almost hardly done today. It's all, done, in the United States, for example, like ACH, or, moving things from analog to digital. I know Andy and Mark know how many, tens of millions of business to business checks are still written, where you don't really know where and when it's going to be cashed. Why not move some of that to things where you can see it, more EFT or real-time payments or something that just gives you more access? In a family, when you're paying your brother or your parents or whatever, you're telling them when the money's going to be there. If you're paying your own company, your own internal legal entities, why should you be long or short for internal cash flows? You shouldn't be. But yet we see 30, 40, $50 million for modestly sized companies and billions of dollars in the banks. So, and then with this position here, all we're doing is we're giving, people options on what they can do during the day, as many options as they, as they think they're up for. Not many corporations can work in real time, but we give this to them with a forecast for the next day. And then what we'll do is, let's see if I can move this. This is the same information, but just a different picture. Now you go to the corporate treasurer. And again, very consistent with what, Mark and Andy are saying, is now the corporate treasurer just wants to know, when is he or she going to run out of cash? That's the first piece, especially today. And once they know, when that is, they can then start to, go ahead and kick in a revolver. They can start to look for monies that are stored in some other currency. But once they know when they're going to run out of cash, or if they're going to run out of cash, they then can then start looking into the analytics. And those are things that, for whatever reason, but, not because of, it's not necessary, but very similar to what Mark and Andy said, I fully support what they're saying, because the need is there, the banks just can't get to the data and show it to their corporate customers. So again, it's very simple. The idea is much like a game. You want to keep your inflows and outflows perfect. We're the only platform that that even tries to approach this. We use a lot of high-end math to do it. We use a lot of things that are very similar to Amazon and Netflix. So when you get a movie suggestion, you go, hey, maybe that's not such a bad idea. And the same thing here. These cash recommendations, maybe not such a bad idea. And for banks, saving billions of dollars off their buffers, and for corporations to free up hundreds of millions or tens of millions of dollars of cash during the day, it really is I think it's a very kind of worthwhile goal. And my own view here is, just having worked with so many different of these institutions, is that will be commonplace in the future, much like FedEx became commonplace. Even though Fred Smith got a C out of his Yale paper famously, now, especially with the pandemic, everybody wants everything tomorrow. I'll stop there, George, and see if have any other questions.
Well, one question I have right off the bat, I'm just kind of want to clarify. So is this a service that banks buy and use it just to manage their own funds, or is this something that they use to help their corporate clients? How is that used?
It's both, George. They both do it to manage their own buffers and their own cash flow. And then they also can take that information, because they're the ones who are processing those payments, and then they can expose that information to their corporate customers.
And in terms of monetizing the data, meaning making money from it, just explain that. I guess what you're saying is that by knowing the flows in and out, you're able to save money as opposed to make money.
Well, in the case of, let's see here.
You want to go back?
I would like to go back if I can.
Going the wrong way.
I'm going exactly.
Here, I'll do it.
Okay. So right there, so for example, for the bank itself, they don't want to be excessively short like they are. You see this in the day where it's red, and then especially if they're a European bank, if they wind up holding money at the end of the day, they actually have to pay a negative interest rate to the central bank to hold it. So that is a cost to them, and it's a cost of funds, and it's actually an expense for them in Europe. On the other side, George, for the corporation is sitting on $100 million during the day. They have suppliers to pay. By knowing what those are, they can go ahead and free that money up rather than sit on it. Pay those. If going back to Mark's example of paying it 10 days earlier, could they get a discount on some of that? So there's you not only reduce the risk, you reduce the expense, and then there's some income benefits to it as well.
Okay. Just a couple of questions. How is the trend toward real-time treasury and transactions affecting the need to harness this kind of transaction data? I mean, everything you're talking about is not end of day, it's intraday. So I'm assuming that the move to real-time treasury is a big motivator here.
It is, but honestly, again, as everybody in this panel knows, is that all the data exists. So all the banks, all their core systems that they use to process, all have real-time timestamps down to in some cases, it's sub-second. And so it's not that the data isn't there, it's just taking that data and taking a few fields of the data, 10 or 12 data fields, who, what, where, when type things, and then just putting that together and then showing that on a screen. It's all the banks have it. It's not really a problem to pick it up. And for the corporations, there's only 5 or 6 really primarily, let's say, AR/AP systems, and then the bank's data. So it's not really a very difficult thing at all. Basically in a week or two, you can at least be up and running to see what your intraday profile looks like. And most people have never seen something like that. So it's always a news flash, and they're always interested.
Okay, thanks for that.
Thank you.
Okay, so now I'd love to ask anybody if they have a question.
I do. Can I? This is Jim Owen, and I'm very interested in the topic, and I appreciate you guys shedding some insight. I wanted to ask very specifically about monetizing data. There's 10 of us on this call right now, and presumably you would know the email address and some basic attributes, and we're 10 people who would get on a call about monetizing data. How much is that worth? Is that $1.50 for each of us? That kind of thing. And the reason I'm asking that is because I know we've brought up Netflix a couple of times in light of COVID. So platforms like Netflix, let's say the giants, big audience platforms have a much larger streaming audience, and everybody's online now instead of physically present. If I can monetize that data, if I can collect data on that online audience, can I make up the revenue that I'm losing at an event? They're not coming to my concert, but I can get them on on an online version of it for maybe a smaller amount, but get a lot more people. So, and the baseline I'm really trying to get to is, if I have a platform that charges $2 a month to get subscribers, if I collected data on 1 million, new subscribers, can I give it away for free? Because, that data on those people, maybe I ask them for information as they come in, or whether or not they like the show, or they like the, the concert they just saw. If I can engage them and collect information, what is that data worth? And I'm really trying to get to that. And also the data governance, which was touched on a little bit earlier, in terms of if I bring in, let's say the Dallas Cowboys and Coke, and let's say 5 other sponsors, who has the right to that data? It's Dallas Cowboys platform, but these other guys are, let's say sponsoring it. So I didn't know if you guys if you had any insight on some of that type of perspective on monetizing data.
Any thoughts? Those are all analogies to the financial services industry.
The short answer is it depends. So because you're talking about a mix of the case that you're mentioning is more demographic data. Where do I live? Where do I live? Who might I know, et cetera. Netflix, Amazon, et cetera, are much more based on behavioral data. What have I done? What do people who act like me actually do? What are the relationships between the things that I buy and the things that someone else might buy? So static data, demographic data tends to be less valuable. It's really no different than, say, the phone book in terms of knowing a little bit about the person and or the organization that they work with. So it's certainly usable. As for actual value, hard to say, but I would definitely say that the more that you can get, the more information you can get on the day-to-day and the interactions, the groups that these folks are in, and the way that the various groups interact, that's far more valuable. So, for example, if it's do the Dallas Cowboys followers have much more as a group, have much more of an interest in this venue or this soft drink and so on, and being able to market to them based off of that combination of who they are and what they do becomes a much more powerful combination.
Yeah,
Well,
pick up
sorry,
on that.
Mark, what you were saying, I think it's exactly the analogy that Jim is bringing up here, right? I mean, it's the mass of people and the connections in the ecosystem.
That's right. I mean, and that's been, from a banking perspective, that's been really where the interest is. So we have a lot of data, payments data, and Andy brought up real-time payments during his bit as well, which could potentially change things really dramatically because of the amount of data that would be included with the payment instruction. Because that's a core problem with many of the payments that are happening today, is that, you know, Andy sends me an invoice, I send him a check, Andy's waiting for that check, and then he needs to send the check to somebody else for services that he got from them, right? And that whole process could take a week or a month or a year, depending on what a, you know, bad guy I am in terms of paying my bills. On the other hand, in real-time payments, that world, to your point earlier, Bruce, you know, you kind of know when the data is coming in, when it's coming in, because it's in the payment instruction. It may not be real time, like I'm paying you this second, but I'm paying you on October 10th, Andy. So you know, right, I'm paying you on the 10th. You can schedule your payment, right? And you can create these kind of contingencies. That has a cost component, savings component dramatically, but also, and this gets to the question around the Cowboys, is this something a bank could offer to an ecosystem to say, our product does the following things? That allows you to know when you're going to get paid, schedule the payment, and the bank is there as the connector. They're the ecosystem platform that says, I know that Mark paid Andy, now Andy can pay the other one. It all becomes like one transaction instead of a whole chain of them that are manually done. And that's kind of that's where the real opportunity is now. And that's science fiction, right?
At the moment, yeah.
It's theoretical, but that's the end game. That's the target state.
So can I add one other thing into there? So what, you know, the real tech that I'm talking about that underpins what I'm doing is blockchain technology. And so if you looked at international settlements and payments, for example, I could do that in 5 minutes using blockchain for, you know, 5 cents or 50 cents instead of going through a lot of correspondent banks over a 10-day period. But the other difference is I also know the payments, that payment knows what it is. So every time it moves, every time there's an event, the actual payment mechanism tracks that data. It knows what time and where, when, and who sent and who received it. And there's a value to that. I collect a lot of data in the process, and I'm really trying to figure out what that type of data or customer habit data, because you mentioned that before too with the Cowboys. If somebody used a payment mechanism I made available on a blockchain, I know what they bought, when they bought it, what they were engaged in, how they got that coin, and where they sent it to. And I'm trying to figure out, how do I monetize that data?
Okay, good point. Good point. If anybody else would like to ask a question, you can either speak up like Jim has, or send me a text message through the chat. Any final thoughts, Bruce or anyone else?
George, just one item about the blockchain is that what I don't think that we've solved, we've approached some of this a couple of times, but for large banks, and again, Mark and Andy deal with this all the time, but for massive banks, they do millions of transactions, you know, a day, and they do, you know, hundreds of thousands of transactions, you know, almost a second. So for blockchain, there's been a throughput issue in terms of being able to solve that.
Sure.
So, you know, I think as long as you can keep the payment volume modest, you know, blockchain can handle some of that. But when you really start talking about the serious banks and really talking about serious volume, you know, it's another thing that has not been resolved.
Yeah, if I agree. And I mean, I think you'll see like JP Morgan has their own JPM coin, and they are doing a lot of work, especially on the international settlements part of it. But I think in general, it's just, to me, it's really more about the type of data that's available as you go through that process and you collect and track it over time. And to the points you guys were making earlier, there is a lot of value to that. It's just figuring out how to pull that together into a business model that makes sense.
Exactly.
Sure. Okay. Great. Thank you, Jim. Any other final thoughts, Mark or Andy?
I'll just add that we are, you know, data is more usable now than it ever has been, between cloud computing, between consistent use of payment formats, between cores getting faster and faster. The challenge still remains, how do I get access to the data? How do I ensure that it's accurate? And how do I figure out how I want to use it? for a number of the workshops that I've led, the question I lead off with typically is, if you could find out anything about your business, what would it be? And organizing that, even that principle, can be challenging for an institution. Sure, I want to know profitability. That's great, and there are many ways to do that. But understanding what you want to know from the data is often harder than using the data itself. So understanding what your starting point is really the first step on that journey. Understanding what you want to know is the first step. From there, it's really just getting the other things to line up and figuring out what your system capabilities are.
Great
Yeah,
point.
I agree, Andy. I think that it's about a mindset as well, and going on offense, basically, like going back to that Harvard Business Review article. Monetizing data is definitely going on offense, right? Because you're not just securing the data, storing it, making sure it's available to regulators or people who you're required to provide the data to in a banking context. It's about stepping outside of that mindset for a second, which is overwhelmingly run by the risk function within the bank, which God love them. I mean, there's more and more of them all the time. You need to say, okay, so let's get the rest of the business stakeholders involved here. Let's talk to the sales group. Let's talk to fulfillment. Let's talk to product, right? And say, all right, so what data are you getting today? How frequently do you need it? What's missing, right? Because that could lead to some, oh, we have that data. It's right over here. We have a regulator report for that. Okay, well, let's just figure out how we can turn that report that goes to the regulators into something the business can actually use, right? And because that could yield, a new customer or increase in
new
revenue.
line of business,
A new line of business, a new product opportunity, like the one that I just totally made up on the fly about this ecosystem. I didn't totally make it up, because that's the logical end game. That's where we want the land.
Fantastic. Okay, so lastly, everyone who's been with us, thank you for attending. Here are the contact details of our three speakers, if you would like to contact them. This presentation is being recorded and will be available on the Stanford FinTech MeetUp site within a couple of days. And lastly, our next meetup is how blockchain is changing the financial services industry for real. And we're scheduling that for October 27th. Jim, maybe you want to join that as well. So again, thank you very much for your time today. Thank you, speakers. Appreciate your insights and your availability to be on this webinar. I really appreciate that. And so do all the people in the Stanford FinTech meetup. So thank you very much, and have a good rest of the day.
Thank you, George.
You're welcome.
Thanks,
Thank
Mark.
you.
Thank you, guys.
Thanks, Andy.
Thanks, everybody.
Thank you. All right, bye-bye.
Bye.